Hey gang, Dennis Tubbergen here with another market update for you. Today is Tuesday, May the 1st, 2018. I have on the screen in front of you here a monthly chart. This chart is of the S&P 500 index. You can see on the chart that I've drawn an upward sloping price trend channel. If you've been a longtime viewer of market updates, you've seen this before. And notice from the market bottom in 2009 up until late to mid 2017, all the prices were very nicely contained in that upward trending channel. And then we saw in 2017 a breakout above the price channel. And often this is what we call a breakout conclusion to an upward price channel. So that often is an exhaustion move, and you see the downtrend start from that type of chart pattern. Now, as we've often discussed, analyzing markets in different time frames is very helpful also. We're going to go to a weekly chart now of the S&P 500. You see I've drawn a similar upward price trend channel there. Not quite as upward sloping because, again, we have a weekly chart, but the price channel is still certainly valid, and you've got the same breakout move over the top. An exhaustion move is typically, again, what you call that. On the bottom of this chart, I've drawn a MACD indicator. This on a weekly chart is pretty powerful. It can show when trends are going to change. Based on this MACD, you see the crossover lines here that the trend now is certainly down. And then when you look at a daily chart of the S&P 500, you see what we have here is what I would call a descending triangle formation. You see the bottom of the triangle, which is represented by the horizontal line on the chart. You see that we've connected some lows there, and then you see the top of the triangle is descending. Typically, when you see a descending triangle, that precedes a downside move. Now, that doesn't always happen, but it is fairly reliable. You see that we have a line here that we would consider to be a support line. Once prices break through that, that now becomes a resistance line. So we're looking really at potentially a breakdown here. We've got to see prices on the S&P 500 or levels drop by about 100 points to have it break through there. We think that that is, again, the highest probability here. So given where valuations are as far as stocks are concerned, when you look at a smooth 10-year price-earnings ratio, when you look at a market cap to gross domestic product ratio, you look at a lot of things we've been looking at, margin debt, we certainly think that stocks are pretty stretched here. And technically speaking, we think the highest probability move remains down for stocks. That's today's market update.